My name is Maria Vovchok. For those of you who haven't met me yet, I'm head of BD Media Lead at Dubai Blockchain Center, professional conferences. And I'm super excited to have this next panel discussing RWA. I'm super excited to welcome on the stage. Please give a big hand to Zaher and Orm, who serves as a senior manager driving ecosystem growth at DMCC, guiding founders through Dubai's innovation ecosystem and powering the city's rise as a global crypto hub. Also next we have Caspers-Pabst, Director of Institutional and Ecosystem Growth at Zigchain, bridging traditional finance with blockchain to scale institutional grade RWA solutions. Give him a big hand, be louder. I think, Philip, you should sit here closer. And last but not least, please give a warm welcome to Alex Scott, who leads Superteam UAE Middle East efforts, building vibrant developer communities and accelerating Web3 startups on Solana throughout the UAE. Once again, welcome, gentlemen. Oh, yeah, yes, thank you, appreciate it. So, I believe that everyone here in our audience, let's say the majority knows you. But one thing, if somebody, let's say, haven't met you yet, and they want to approach you, what is one thing they definitely need to know about you while they want to discuss some business with you today?
Hello, everyone. My name is Zaher. I think a lot of people in the room know me. I'm very good at connecting with people, so that's what I, is known for. So yeah, connecting.
Connecting people. That's amazing, like Nokia. In the past.
All right, now to me, I guess. Hello, everyone. So a lot of you guys would know me as the boring institutional guy, but the reality is I started off as a startup founder myself in 2013, actually, and been in the tokenization space since then. Just took a little break over the last 5 years, and now I'm back. So
amazing.
Yeah.
Alex.
I'm Alex. I'm the Solana guy. Whatever you want to talk about Solana, just come to me. But yeah, my goal is make everything happening on that blockchain.
Fantastic. So before we dive and go into more detail, to kick it off, what do you believe, what does the real RWA ecosystem need to work beyond the pilot stage, once you need to scale? Who would like to start?
I mean, I can take that. The entire industry is definitely in pilot stage still. I've joined the industry again now 5 months ago on behalf of Zigchain, and it's just amazing to see kind of the innovation that has happened over the last couple of years in the DeFi space. But the reality in its current structure, it just doesn't scale, right? So you've got all of the various stakeholders that are needed in order for this ecosystem to scale, looking at the same thing, but the rails and the structures don't exist for all of the parties to be interacting with. So what I'm seeing currently from where I'm sitting is that DeFi is starting to look more like traditional finance. So it's more of like a tech layer that's now being built on top of what's already been securing assets all over the world for the last, since the beginning of the financial system, actually. Which I'm personally very excited about, because that means we have enough security, enough kind of structure for big asset managers and investors to be putting their assets and capital at risk, essentially. Yeah.
I would say adoption. We've seen a lot of pilots. Some have went live as well, specifically here in Dubai. But would love to see the 1 million, 10 million, 100 million users on different tokenization platforms, people buying assets, selling assets. So I would say adoption.
Alex.
So we use this framework. You think about it like a cake with 3 layers. You've got at the bottom is capital and assets. So you need people that are like wanting to tokenize things, right? We're talking about the massive silver bar that you have here, or it could be real estate on the palm. You need the like high quality assets that people are actually going to want. Then you have the infrastructure layer, so you need a distribution layer, the technology that you can actually efficiently distribute that to anyone in the world, and people can trust that the network will settle the transactions. And then there's the application, like a lot of the founders in the room, people that are probably startup founders, maybe, raise your hands. Yeah, this is the application layer in the room. People that are actually building, say, like the tokenization engines and distribution networks.
Well, whenever we're talking about any RWA project right now, it's still it's at its infancy, as we said before, but also there are so many things that are looks like challenges. From your perspective, is it like a legal hurdle right now, a lack of tech, talking about infrastructure or distribution problem, the biggest one? Pinpoint one.
I'm happy to take that. I think the regulatory piece is definitely the biggest issue in the market right now.
In the UAE.
Globally, actually. So if you look at the DeFi space and everyone operating there, from kind of the lending protocols to the curators, etc., whilst all of these systems are governed by smart contracts, which kind of act like regulation or a structure to a certain degree, there are no regulated entities sitting underneath that. So curators act as unregulated asset managers ultimately, which is fine for the experimentation stage, but just won't cut it for institutional adoption. Yeah.
Zaher?
I would say it's the combination of liquidity and the complexity of regulations. I do believe regulations are there to enable, for sure, and we've seen that in Dubai with many projects going live. But we're yet to see the right liquidity and the complexity that, the legal work that goes behind tokenization is also kind of a bottleneck for projects to kick off.
Alex?
Yeah, definitely agree on the regulation thing. It really depends on the asset class, though. Like my biggest hope for everything is that in my lifetime, we figure out equity on chain.
Okay.
It feels like a long shot, but pure, real native ownership on chain is like really the ultimate dream there. I think on like the user experience as well. Like you've seen in the last month, like DeFi blowups, and like there's still a lot of risk, and yeah, some of them are getting bailed out by foundations and Tether and stuff, but it's not transparent to users. Like it's actually really terrifying to take your life savings and put it into a DeFi protocol, and you don't know like all the how many multi-sigs are they operating, the smart contract risk, all the layers of risk that you're picking up now that you didn't exist before, and we do a really bad job of presenting that to people.
What do you think? What can be done?
Better, so the TradFi world actually has solved a lot of this stuff. Like risk is not a new thing in humanity, right? Like people boarded ships and crossed the ocean, and
we all the time see that the problem is still the same. Why it hasn't been solved, in your opinion, until today?
Yeah, well, because it is like very decentralized, and there hasn't been like regulatory clarity. It's like everyone just kind of does it their own way, and probably like the bare minimum to get users to encourage deposits in a lot of like DeFi protocol cases. So I think it's like you have to go through some cycles of pain until the market reaches maturity, and then users are also like much more aware, and they're like, well, what if that happens again? Like, what is the risk? And people start asking these questions, and there's like a bit of a generational thing where the Gen Z native on chain that's coming in is going to have to learn just some of the pain that we went through as millennials in the financial crisis.
Okay, got it. Zaher, I'll jump to you right now because you, as it was mentioned by the way by Ahmed bin Sulayem, you have how many projects? Like in this case, like how many, let's say, per year sort of are already like for the last year did you have that are residing in DMCC?
So in total, we onboard around 3,000 companies per year. On the crypto side, 3,000, yeah. But that's across all different sectors. So we have commodities, energy, finance, all of these sectors. But on the crypto side, we onboard around 150 to 200 projects per year. So that's also a substantial number.
So whenever we're talking about RWA in this case in particular, when what exactly founders usually need when they're trying to build in this particular space? What kind of problems they're sharing with you? What kind of support they are lacking and they're seeking?
Yeah, absolutely. I mean, for us, creative ideas is not a problem. We meet founders every day, and those founders have crazy ideas. We've seen projects that want to tokenize drones, to tokenizing animals.
Can I ask what kind of drones?
Drone shows. So you could participate in a drone show, and you could get a piece of the profit. So we've seen different types. Animals,
Which one
people.
Which one I would say kind of surprised you the most?
surprised me the most. Animals.
Yeah, I've heard about horse race tokenization project that is done here, but talking mask, if I'm not mistaken.
Correct. But that's a little bit different. We've seen like tokenization of animals, literal animals, that can be utilized in
pets or
not pets for sure. Maybe.
Okay, that's interesting because I'm just like trying to comprehend how exactly would you tokenize an animal, and if, for example, it dies, what would you do with the tokens? I mean, like, is it like in this case depreciates in price like completely right away? Like, is this something new?
Well, that's the thing. Founders are very creative and very technical at the same time. So they almost forget about how important it is to structure a regulated product, especially when it comes to tokenization. If you want to achieve adoption, liquidity, you would want to structure it in a very compliant way.
Okay.
So being that technical, I think the first thing that founders need is to learn more about regulations, regulatory clarity, not only the do's and don'ts, but also on how you can scale a compliant product.
Yeah.
When you talk about real estate, when you talk about commodities, yes, you can tokenize. It's very easy. Ruben from Vara said 10 lines of code. I believe now it's even less than that. You can tokenize, you can put it on chain, but then how would you achieve scalability?
Yeah.
How would you put it in a very compliant way? So I think the first thing is that regulatory clarity and for companies to understand what it takes to structure and create a regulated product. The second thing is access to all the infrastructure players, all the complementary stakeholders. We've got two wonderful infrastructure players here, Solana, Zigchain, that support that. So founders having that access is very important, especially when it comes to legal structuring as well. So you need law firms, you need consultants that are specifically specialized in that. And the third thing is liquidity, which is, I think, the biggest blocker for tokenization. Having the banks, the market makers, the users, everybody on board, so that when I put that asset on chain, yes, I can exit my investment anytime I want. There is liquidity. There is somebody on the other end that can buy. That is the third thing I think that founders should look at.
So from your perspective, only the regulator, let's say, clarity is the only bottleneck that can unlock more liquidity at the moment?
It's a very interesting point because I'm a big fan of bringing regulated products to DeFi. And currently, yes, there aren't any gateways where you can put a tokenized real estate title deed in Aave and lend it, borrow against it, which I believe the opportunity here for anybody building in the RWA space is to connect those regulated assets to the DeFi world, to find a way that satisfies the regulator, but also would be very friendly for users.
Yeah, thank you. Alex, let's go to you because I would like to know more about, in this case, Solana startups. From builders' side, what makes a project attractive enough for developers and startups to come in?
A project here means like a really.
RWA. How many do you have already?
Well, I think 2 days ago we crossed $2.5 billion of RWA tokenized on Solana, which was like
you should make an announcement.
pretty big. Yeah. Well, it's on X. Yeah.
Oh, sorry, I missed that one. I've seen your post, but I haven't seen that one yet.
Yeah. I think maybe this is more of a LinkedIn crowd, but we can post there as well. But yeah, it's an exciting time. There's a lot being tokenized. I think people are attracted to. Ultimately, like why do you tokenize something? It's because you want access to global liquidity, right?
Yeah.
And so we have a lot of stable coins that are looking for a yield.
But can I ask you from RWA perspective, still a lot of RWA startups, they're on Ethereum. How are you trying to beat it?
I think, look, so yeah, Ethereum has this kind of like momentum. a bit like fax machines before the proper internet came around, if you're old enough to remember that. And for us, it's just it's a time lag. It's you clearly have something that's much higher bandwidth, much higher transaction rate, far cheaper, and it is just there's a bit of an inertia, 4 years of inertia that are behind Ethereum. But I think once people see that, look, most people in the room, I'm going to get, how many people have a Phantom wallet or Soulflare or some kind of Solana wallet or have ever traded anything on Solana? It's out there, right?
Yeah,
and people are eager to deploy capital into these assets, and we have people that are very risk on and experimental and want to do things with this capital. So ultimately, that is what wins the game, is the retail audience.
No, but I can tell you definitely, Solana has been doing very active work here in the UAE. But obviously, it's not only UAE. So in this case, we're talking about worldwide. But congrats on that. It's also I believe, very impressive milestone. Philip, I'll get to you right now because I would like to know from the institutional growth perspective, what do serious investors or partners need to see before they get involved?
So we cater for two different types of institutions.
Okay.
One being the kind of asset issuer. So these are traditional financial institutions that run funds, that have ownership of various types of assets, and we're helping them get on chain.
Okay.
And then we have institutional LPs. So I think what the issuers look for is very straightforward. They see a lot of opportunity within the DeFi space from a distribution, so fractional distribution and composability point of view, which ultimately gives their traditional products and structures new product features, right? It's a so, for example, if you had a working capital private credit book, typically these lines are revolving over a 90-day period. As an LP, if you invest into that, you're typically locked between 6 and 12 months, right?
Okay.
Because the lender, the fund, needs to keep circulating the capital in order to make a return. Now, what we can do is to take this kind of more closed, long, the TradFi industry would call this a short-term product, but in DeFi it's called a longer-term product. We bring that on chain, and with the help of the composability, right? So as in propping that up on lending markets like Aave, Morpho, etc., and then also creating additional liquidity layers through market makers as well as automatic market makers, we can start shrinking that down to daily and even in some cases instant 24/7 liquidity. Right? So this is the kind of stuff that institutions are after. It ultimately means that there's more opportunity for them to earn on the assets that they've already got on their balance sheet, that they're already underwriting, but they're struggling to tap into the opportunity because of regulation, right? On top of that, distribution right now is tiny. Yeah, so if you look at the DeFi space, the entire DeFi space is about $110 billion right now. Yeah, that is minuscule. If you compare that to the balance sheets of Nubank, Revolut, just to name two neobanks as an example, they're sitting at a combined 110. So 150 versus 110, it's not that big of a difference. So you can understand what a big opportunity is in front of us actually within Web 2 distribution of these tokenized assets. So this is one thing that we heavily focus on. So whilst we've got our own blockchain to bring assets on-chain in a compliant way with a few licenses underneath as well, we plug into liquidity pools on Solana, on Ethereum, wherever we can find them. In some cases, through the likes of Fireblocks, Taurus, accessing more Web 2 kind of fintech native liquidity pools, and we need to start further building out these distribution networks, which basically make the overall market opportunity interesting enough for institutions, and then on top of that create a regulatory stack that these institutions and their LPs would start feeling comfortable with. And that brings me to the second stakeholder set, which is the institutional LPs. They need all of this to happen to really start deploying heavily. Most of the institutional deployments in the DeFi space that you see now come from crypto native investors. Even if it's individuals, these are the OG whales that have been around since day one. they need to put their stable treasuries or their family office money essentially to work. So it makes sense for them to kind of, anchor and fund some of these DeFi pools, but that doesn't scale, right? Like we need big balance sheets to come in, and I think we're at a pretty interesting crossroads now to make that happen.
So how are you in this case making this with Zigchain?
So we have an interesting setup in the sense that we can structure tokenized funds out of the DIFC actually. So a traditional fund structure that any asset manager would be comfortable with.
So you're in this case you said in DIFC, you're using DFSA regulation.
Yeah, so we're kind of building an ecosystem of entities, some of which we're building ourselves, others we're investing in, some we're acquiring altogether in order to basically allow us to compliantly launch all sorts of structures and distribute them in a compliant way. So fund tokenization, as special purpose vehicle tokenization, all of these things can happen for us in the DIFC as well as out of Luxembourg. And then we have a kind of digital banking license that allows us to distribute compliantly. We can do this in a wrapper format, so that's similar to Ondo, I guess. Stay tuned on that front as well. There will be something interesting coming out soon. But we can also do, the kind of securitized tokenization as well, which is interesting. And then for each one,
step, or are you already?
So this is, a tokenized fund is essentially a security, right? So we're at it.
So when you mentioned actually about regulations in Luxembourg, or are you already doing this in DIFC in Dubai?
So in the DIFC we can tokenize funds. Yeah.
Amazing. Zaher, I'll get to you because I would definitely like to know how, in this case, you're as well helping the startups that are coming. Let's say there's RWA startup coming from zero, from scratch, and they want your help. So how does the DMCC ecosystem, in this case, how are you helping them to move from this tokenization project from the concept to reality? Can you guide us step by step?
Yeah, absolutely. As a licensing and registration authority, we basically help companies expand into Dubai. So the first thing is the licensing or the license offerings that are available, whether this is non-regulated, being technology provision or trading, creating software basically, all the way to structuring a regulated product under the VARA framework. So once that is done, then access is granted to the ecosystem that includes multiple players, accelerators, technology providers. Solana Foundation is a very dear partner of ours. Exchanges, media companies. We love to call ourselves the launchpad for businesses. So our role is kind of limited to connecting, facilitating, and opening up the opportunities for those companies to grow. But more than that, when it comes to tokenization, we've got all of these players, but we've got the wider ecosystem, such as the DGCX, the TradeFlow, the gold ecosystem, the diamond ecosystem. Just behind you, you have the industrial area of DMCC, where all the refineries, everything industrial is done there. In Almas Tower, we've got the largest vault for the storage of precious metals and stones. This is where we're storing the largest silver bar. We
already heard about copper storage.
Yes.
We'll be there soon.
Exactly. So all of that physical infrastructure is very important for companies to thrive. And therefore, coming back to the point that, yes, tokenizing from a technical perspective is easy, but especially when you're talking about tokenization of movable products, it is very important to have that right physical infrastructure. Yes. So our role is, again, to connect, facilitate. And one pure example that I could give is an event that we ran last year, Q4, which was called Crypto Diamonds. And then we brought all the diamond players with the white hair, ties, very traditional, together with the OGs, crypto OGs, to discuss about diamond tokenization as a new asset class, what can be done there. And actually, the result of that event was Control-Alt, one of the regulated VASPs, also a member of DMCC, tokenizing or putting on chain $250 million worth of diamonds with Billiton diamonds. And that eventually could grow into an asset class that people can invest in. You're talking about unique diamonds, pink colors, yellow colors, whatever it is. But it is that's tokenization. It's giving access to things that you don't typically have access to on a normal day.
Thank you, Alex. I'll jump to you right now because you're dealing with a lot of builders, and whenever right now RWA is becoming the thing, one of the most important trends. What do you believe they are underestimating once they enter RWA space?
The biggest friction point I see is navigating this legal and regulatory process, and like just the amount of money you have to spend on legal fees just to get the opinion of like the right way to proceed. Like you've seen it as well, I'm sure, a lot of your DMCC companies, because so ambiguity drives this like need for clarity, and then the lawyers are the only ones that can actually navigate and give that clarity. So I think, yeah, it's still a big friction point. Like you need to set aside like tens of thousands of dollars just to sort of know which direction to go in so you don't get burnt.
Is it the only one?
I mean, building a company is just brutally hard. So we can go through the full list of like co-founders fighting with each other, and hiring people is really hard. And at least here you can find them abroad and then bring them here very easily and get a visa for your team very quickly. But then, look, finding product market fit is brutal as well. So even if you know what you want to build, you have the permission to do it, and then it's like, well, is there a audience out there that's willing to pay for what you're offering, and is it big enough to scale that to a venture-sized company? It's hard work.
We really value you're being brutally honest in this case.
I can just add to that for a second. I think the finding product market fit is really the biggest pain point of the industry as a whole. So experimentations have scaled and continue to scale in a confined environment, but to go beyond that, to really prove, a product market fit is really, really difficult for loads. If you look at the DeFi space now, risk-adjusted returns don't exist. Yeah, so most of we've seen it now with all of the hacks in the industry. I mean, it's still a very, very high risk alternative asset class that's purely unregulated, right? So returns would have to be adjusted to that to give comfort to investors around the world at scale, right? And this is how you would find product market fit. Hopefully RWAs can solve for that to a certain degree, which basically means that we keep the plumbing the way it is, but we just put more high quality assets underneath it all. That could be like a great start, right? And hopefully that is now what's going to define the next kind of like episode of scale for the space. But product market fit is probably the thing that majority of the companies are toying with. And look, I mean, like Solana is a very big company in chain, same as us, where we're not too small either. Ethereum is the same, but everyone is looking for product market fit. The reason it looks very big from the outside because inherently all of these systems are global, and the globe is large. There's a lot of people, there's a lot of money. But if you compare it to like the overall size of the financial system, which is in the trillions, like we're not even scratching the surface yet.
Yeah, so talking about, yes.
I just want to add a small comment here, doubling down on what my colleagues here said. Basically, from the conversations that we have with founders, tokenization is 95% legal work and 5% technical. So the barrier when it comes to legal structuring, regulations, and so forth is definitely a pain point. And having that product market fit is very important, because imagine you raise funds, you go and have the right legal structure, you create a product, but then you end up with no liquidity, no users, no adoption. So this is definitely very important, and I guess there's a lot of the RWA labs and the legal team here can cover part of it, but then finding that product that would attract investors is very important. Tokenization of money market, with USDT, with all these stable coins proved right, but you also have locally here a lot of dirham-backed stable coins that have been created, and
they have been approved by the central bank, which
absolutely. So we'd love to see more use cases of those stable coins being used, whether payments, settlements, using on terminals, and this would push adoption much further.
Thank you. Philip, I'll get back to you because one of the things that you mentioned, you're dealing with a lot of institutions, obviously. Where do you see the biggest gap between what institutions say what they want and with what they're ready to adopt at the moment?
So what? I mean, what they want is they wanna do some innovation, right? I mean, I think
what they say and what they do.
everyone is trying, but they don't have the right tools available to them right now, in my opinion, to basically scale this to a significant quantum where it actually matters. To them, right? Like majority of, see a lot of big asset managers entering the industry, but the reality is most of these initiatives are innovation initiatives for them, right? If you compare that to like their total balance sheets, etc. So we need to create more and more rails, catering for various different asset verticals, different regions, etc. that will allow for this asset class as a whole to scale, which will be hugely driven by institutions. I mean, my opinion of this entire space is that it's going to look exactly the same as the banking industry in just a couple of years' time. We just had a big event a couple of days ago, and I mean,
it was yesterday, no? The day before yesterday.
Yeah.
Yes.
And I mean, the crowd was really interesting, right? It was bankers in suits. So they're here to play. We just need to give them the tools in order to do so, right? So there's a lot of kind of responsibility on all of us to be working together to create the frameworks and the tools for these guys to be comfortably deploying their balance sheets.
Alex, I'll get back to you because as I mentioned, Solana community is doing an amazing job in the UAE, I believe so. And you actually built, as I said, like big Solana, you can say hub. For UAE become the #1 RWA hub, what do you believe has to be done from your perspective?
It's a lot of what's already in progress, giving just clear rules. Hopefully, our friends at ESCA can sort out their stance on tokenized equity, but it's like giving that clear path. So it's like, you can come here and build without like looking over your shoulder. Mm-hmm. Did you have something else specific in mind?
UAE is already definitely on the map. It's always has been whenever we're talking about since our creations and ADGM being active. But still, as we can hear about some cases in Switzerland and Luxembourg, what do you believe UAE has to do to be #1?
I mean, this is the obvious thing that we're not talking about, which is like we can't have drones flying at us, and we can't be in a war. Like this is a real issue for me, right? Like we was supposed to have it this week. Should have been a huge week for us, but we canceled because like 95% of the audience for that is international, and they're just not going to get on a plane here right now because of what happened in March. So, look, I mean, I stayed here through all of that. I declined like six flights from 3 different countries, tried to get me out of here, and I told them no, because I, like many of the people in the room, believe in the leadership of this country and that they're going to figure it out. I think moves this week are showing that they're taking their destiny into their own hands, and I think. There's a bigger geopolitical like perception of risk here that needs to be communicated outwards, and that's through content, through us posting, through telling people what's actually the reality of what's happening on the ground.
I've seen your post, and I totally support that because we're actually all the time showing practically every day what is truly happening, and I really, really value that because. Like I've seen it with my own eyes, and that's why I believe people out there, they need to see it as well.
Agreed.
As a media professional, I was so frustrated with a lot of even internationally recognized media, how exactly they're showing what is happening in Dubai and the UAE. So yeah, just wanted to say kudos.
Thanks.
Yeah. Sorry if I interrupted you. Did you finish?
That was pretty much it, yeah.
Okay, Zaher, I'll get back to you because obviously DMCC is I would say right now the biggest crypto free zone, we can say so honestly. From your perspective, what has to be done? And I believe that you also working on this with Vara. Maybe there's something you can share with us because obviously as we discussed it today, one of the biggest hurdles, and not only here, let's be frank, but it's always regulatory one.
Yeah, I mean, I want to argue a little bit about the positioning of the question. I think Dubai has become already the hub for RWAs.
Okay.
Where have you seen a compliant real estate direct-to-register tokenization project happen?
but we want to know the updates. Obviously, we have heard about that. There's actually stage 2, if I'm not mistaken. Maybe you could share with us about that, what you're discussing behind closed doors. What can be shared here?
Absolutely, yes. So a lot of projects have been born out of UAE in a different way, right? We've seen SPV tokenization. We've seen other models, tokenization in DeFi, which could happen anywhere in the world. But we've not seen, the most compliant product kind of having that regulatory approval, which I believe positions Dubai as the hub for RWAs. With commodities coming down the line, with a dirham-backed stablecoin that is already a big achievement. But I think there's always room for improvement. And to lower that entry barrier that Alex talked about regulations, I think having some sort of a sandbox environment would be very important, especially for startups. Coming here, you wouldn't want to be faced with $500,000 to set up your entity, get your licenses, regulatory approval, take a year or a year and a half. Maybe the product that you are tokenizing doesn't exist after a year or 2 years, right? So it's very important to create that sandbox environment so companies can come and test. And at least when they find that product market fit, they could move to another level and have a full regulatory approval. So yes, that bottleneck could be solved in a kind of sandbox environment, which I think would come sometime in the future. But Dubai definitely is at the forefront of all innovation, all the time presenting new things. So I think this is very possible to happen.
I support that. Philip.
So what was the question again, sorry?
The question is from your perspective, as a company that has come here, you're building, obviously, building a company here, as you mentioned, you're doing events. What do you believe has to be done? You would feel that Dubai is number one, as RWA hub.
I don't know. What we're trying to do right now, and that's also we're a global company at the end of the day, but we've chosen Dubai as our predominant base right now for various reasons.
What made you choose that?
Yeah, so I'll get into that now. So I believe that on the distribution side, we keep on talking about distribution, adoption, and all of these kind of things. And a lot of the distribution that's being built right now and regulatory stacks are catered towards big institutions. And that's great. We need that, and that needs to continue. But I think where we've got a real sort of needle mover opportunity in the industry to not just generate commercial value for everyone involved, but to really move the needle socio-economically as well, is across retail emerging market distribution, where tokenization can really solve big pain points for people, right? So the stablecoin companies such as Tether, USDC, etc., have done a very great job in taking cash and digitizing that to a certain degree, creating hedging solution against very inflationary local currencies across the region. That's fantastic. But then now, what do these people do with that money? They have the opportunity to send it across borders, which is amazing, which they weren't able to do at such an easy, cheap way. But investment is kind of the next stage to that, right? So where do they kind of, instead of putting gold underneath their beds, let's put that in a digital format, have that composable in some shape or form, and a, easy to use kind of savings account, etc. And I feel like a lot of people forget about that, right? And I think Dubai has the opportunity to really position itself as the hub that connects, global financial markets with retail audiences across emerging markets, specifically Africa and Middle East.
Thank you, Alex. Last question.
Can I just add on that one? So I have a very tactical one, just in case there's someone in the audience that can help me with this, which is we don't recognize crypto for visa immigration stuff. So if you have like hundreds of millions of dollars on chain, which I've had people trying to get golden visas, and like we don't recognize that as money, I'm sorry, we're losing talent because of this. And then same salaries in stablecoins. People are getting USDC paid like $20,000 a month. Our threshold is $5,000, $3,500 for a digital nomad visa. We deny them. These are rich people that are going to come spend all their money like on the palm. Let them in, right? So if anyone has any ability to influence that, please get a hold of me, because I have a queue of people ready to come into the country and start building crypto companies.
Amazing. Last question to wrap it up, because we're already running out of time. As you mentioned, we have here like startup founders, etc. And let's imagine they're building an RWA project. The first 3 pillars they have to take into account to build a viable, great RWA project, in your opinion.
High quality asset that people actually want to buy, right? Like I'm not going to buy a share of your cat. I'm sorry, like it's not just not going to make money for me. Like I want 8% yield on a Palm penthouse.
Oh, 3.
3.
Yes.
3 different ones.
3 major things.
Okay. For a good RWA project,
Yeah.
okay, you need talent, right? People
Yeah,
are everything.
talent.
That's the first thing of all of this.
Product talent.
And then you need people that you need to build it somewhere that you can actually sell it to someone,
Amazing.
like Solana.
Amazing. Oh, well, that's the spirit. Let's move to Zigchain. Philip.
I agree with whatever he just said.
Okay. Zaher?
The guy said it all. Yeah, I guess liquidity is also very important. Having the right team, and yeah, I think having an asset that I really want to invest into and have a piece of.
Thank you so much. Guys, please give a big hand to our amazing panelists. I hope it was as informative and interesting as it was for me. Thank you so much. I got a lot of insights. I hope you did as well. Appreciate it. Thank you.
Thank you.